Good morning. This is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to break down what matters today ahead of the opening bell. The month of July has come to an end, and we finished with a total absolute return of $63,201, or 34.22% in our 1% risk model portfolio, where we are risking no more than 1% per trade. No red days for the month of July. Of course, we did have red trades, but on a very nice win streak here, which we're going to keep going for the month of August. In the pre-market, all major U.S. equity indices are in the green. S&P 500, 0.5%, NASDAQ 0.3%, Russell 0.7%, and the Dow outperforming up 0.9%. VIX, a measure market volatility, trading flat at the 16 handle. Which is more or less the lower bound. WTI, crude oil, down 7.5%, trading at the 80 handle. And the weakness in crude, the strength in equities, is being attributed to positive geopolitical headlines. Trump halting attacks on Iran, looking for a rapid peace deal. So this is still in development, a potential headline risk on that front. In terms of the technicals, SPX 15-minute chart, the trend remains up, with the 20 EMA in green above the 40 EMA in red and upsloping. This trend change occurred on Thursday. There is also an upsloping trend line connecting the low from last week, which was more or less the SPX put wall of 7,300. That remains unchanged. And connecting the low from Friday at that 7,400 handle. So connecting those two lines create a trend line. And if we draw it up, this is potential for a third test at some point this week, which could be respected as support. Additionally, last week, we broke through what has been capping upside, that upper bound of 74.50, which is a bullish breakout. Additionally, we reclaimed all transitional levels. Today, 0 gamma 74.45, SPX flip 74.80. 7,500 remains a big balance strike with the previous session's high at 75.12, so a break implies upside continuation for a potential move into the SPX call wall of 75.50. That would be our upside target and upper bound. Now, there are some resistance levels prior to that, 75.30, 75.40, implied high today, 75.41. That is a 0.7% implied move. And there's a bit of a gap in here as well around that 75.30 handle. Now, in the event we do break 75.50, maybe a challenge today given where the implied high is at, but it opens the door to 75.70, 75.80 zone. And this has been a big resistance zone going back to June. So we zoom out here to the 1 hour chart. We tested it once, twice, 3 times, and the next test will be the 4th test. And as we know, the more times we test a level, the more prone it is to break. So potential for breakout on that next test, whenever that may be, for a move into 7,600, followed by the all-time high, which is about 76.20. Additionally, there are some unfilled gaps up in that region as well, no more than 3 points. So I would get that gap detector indicator. It'll automatically plot these gaps on your chart. So when you see a yellow box like this, that is implying a gap. So always potential for gap fill reversal. On the downside, 7,500 may be prone to break given it is a balanced gamma strike, but ideally bulls can hold this level. In the event of a break below, it opens the door to the flip, 74.80. A break below the flip would be a bearish indication for a potential move back down to 74.50, and this would potentially be validated as support. So what was once resistance becomes support. And then the implied low today, 74.37. Again, that is a 0.7% implied move. Hopping over to the VIX, it is now at the lower bound of 15.8. 15.8 marks the low of Friday's session. A break below implies downside continuation. So VIX down, SPX up, with potential support at 15.5. A rather large gap on the downside, entry about 15.7, fill 15, which would be the lower bound of the lower bound. Now, further volatility contraction will support the upside, but unlikely to be the catalyst for any sort of squeeze conditions. That fuel has largely been spent after peaking off 20.5 and experiencing a very sharp vol crush over the past few trading sessions. So that invoked buy flows, that positive feedback loop, which we were talking about last week. Risk is now skewed to the left tail and the potential for negative feedback loops if volatility gets rebid. Now, just because volatility is at the lower bound, it doesn't mean it's going to spike. Of course, there's potential for that, but volatility can remain at the lower bound for an extended period of time. It could drift lower, which again would be a supportive variable. Now, in the event we do get a rebid, key levels to focus on the upside, 16.5. This was resistance, turned support, and now potentially resistance again. This would be upside target, followed by 17.3, 17.5. Another key zone over the past couple weeks. 19 remains the macro pivot, and then 20.5 was the recent peak, and it has been the peak for the cycle before that as well. Transitioning over to our dashboard, total gamma exposure for the SPX is positive, 400 million notional. Trading above our main transitional level, the volatility flip at 74.80. Above, all strikes are positive, that is supportive for the market price. Below, all strikes are negative, that is destabilizing for the market price. Resistance overhead, 75.30, 75.40, 75.50 as the call wall. So potential upside target and upper bound. Now we want to keep a close eye on the max call. If it is above 75.50, potential to break that. If it's below, potentially we don't reach that as a target. Now another thing we want to keep a close eye on, 7,500. This remains a big balanced gamma strike, calls plus puts. And it is skewed net positive, but if you recall from the month of July, this didn't really act as strong support or resistance, but rather a pivot point. In other words, we broke it many times in both directions. And if we break 7,500, we break 74.80. That's where negative gamma is going to start to build, and bears will slowly regain control. This week, like last week, is packed with catalysts, which could potentially support this market rally or challenge it. On the economic calendar today, we have ISM manufacturing PMI due out at 10 o'clock, but the main event is on Friday. Non-farm payrolls are due out at 8:30. Investors will also focus on SpaceX's first public earnings report and AMD earnings on Tuesday, while the 3-day AI4 conference also kicks off on Tuesday in Las Vegas, which is going to feature speakers from OpenAI, Waymo, Cisco. So potential for volatility, well, more volatility in the semiconductor space. So we want to continue to look at XLK, semis, megs for that directional skew amid perhaps renewed rotation, capital inflows back into growth.